Well, guys, we just don't see this very often. What does the latest Goldman Sachs sentiment results show us about the markets? On top of this, why do we now have to be tracking pizza in 2025 and the number one and two largest trades we've ever seen in the crypto markets? With record inflows coming, could we be about to see a massive breakout? Crazy moves on oil, big moves everywhere actually, and of course a lot more to cover in today's video. Join us as we go through stocks, commodities, and cryptos into what may happen next and the big data surrounding it. Don't go anywhere, guys. We'll see you in a moment. Well, welcome back, everybody, to what was a day of semiconductors up and big stocks realistically playing the game of risk on. But was it that good? Well, in today's video, we'll break it down together. My name's Tom, and of course, we'll be looking at the latest macro, big data, and huge flows. And there are quite a big number of them. Let's begin with Goldman Sachs and their latest social media economic sentiment index. I have never seen this so high, and that is a surprise when you consider 2021. People on social media are epically bullish, and you can see it here according to the latest 7-day result, and it is way in front of the latest US University of Michigan consumer sentiment report, which has only just started to pick up. So people have been buying the dip, and we know that retail has been absolutely a big part of that, with many hedge funds being behind, which we've covered in our previous videos. This is also on top of the global GDP forecasts actually declining across the board, which actually makes the market now way more expensive as we are about 2% off all-time highs than we were in February. So what kind of gives here? Well, it's a mixture of different things. Number one, the implied US recession probability has declined from being like 30, 40, 50% all the way back down to kind of like 18% at the time of this recording. And of course, people are just in general extremely bullish. But should we be? In fact, the second half of June, although June does end up usually being a bullish month, is not very good. It's the second worst 2-week period of the year when you track since the 1950s. And this is a fairly big deal when you're talking about sentiment seasonality. This week we have quadruple witching, which is of course the OPEX, generally leading into very volatile Thursdays in particular. And of course we have huge movements just in general because of the conflicts and geopolitical tensions that are out there right now. And this is leading everybody to try to track what exactly is going on. And as we already discussed in our previous videos, it looks like people are literally tracking Domino's pizza orders. There's in fact a new X account that is called Pentagon Pizza Report, which actually tracks whether it's busy or not busy during extreme hours of the night when it comes to certain Domino's stores that are near the Pentagon. And yes, this is now becoming one of the most tracked things from social media when it comes to figuring out if something's going on. In fact, we just saw one about 3-4 hours ago now, and at the same time, it turned out, according to SKB, that we were seeing a huge amount of US military aircraft en route to the Middle East. And as you can see by this flight tracker, there's all sorts of things going on right now. So yes, tracking pizza is now the thing of June, and of course, we expect that to be something that people get onto more and more over the next coming weeks. And it is probably one of the strangest things that I've ever seen in trading and investing when it comes to gaining some form of insight into what might be happening. In fact, it actually was early several times over the last couple of months when things have been kind of happening. Now, we did know that oil moves up generally do correlate with these types of events. And obviously, we talked about in our last video that we expected the spike that was massive to probably decline. That is generally what has been happening. Now, we have since had that. We've had a decline, and then we've had a little bit of a spike up as this is continuing to escalate. And oftentimes what happens is it comes back to around the peak, which would be around that 73 to 75 a barrel, and then it starts to dissipate over the next period. Now, of course, we don't know what exactly is going to happen, but oil is now one of the most dangerous trades because, yes, before all of this happened, there were some nice bullish reads that we were talking about here on the channel together in terms of technicals. Then it happened, then it went ballistic, and now it becomes one of those incredibly high volatile events. And that may not be the best thing for a lot of risk management in our portfolios. And of course, also, generally speaking, it generally does drop off as hopefully these things do calm down. Now, when we move over to the big read that I think we had over the last couple of days, it was that The US market would most likely go up because, generally speaking, it always has. If we look at the Ukraine-Russia incident, obviously when that happened, we did see the market drop in the futures, be bought up through the next couple of sessions and continue up for a little while. And we saw the same thing many, many times over the last 50 years. We also know Iran's oil exports mostly do go to China and not the US, so it doesn't have as great an impact from at least that aspect. Oil exports now via the Strait of Hormuz, I think it's called, or Hamas, by country, you can see here is UAE, Saudi Arabia, Kuwait, Iran, and you can see here the amount of barrels, etc. So there's no doubt it's having effect on the barrel price, but do remember this is part of the reason why we did see that spike up in the US. It does tend to be that reoccurring event, similar to why we often see a spike in oil, then a drop, then if it keeps escalating, a re-spike in oil back to those peak areas. And somebody obviously did trade this because they sold off huge amounts of barrels right near the peak there on the Friday session. So as soon as it opened on that spike, they were like, sell. And since then, they've been kind of correct with USO, pretty much the biggest fund, dropping back down and will probably spike a little bit up now that we've seen further escalation over the last 24 hours. What about crypto? Well, the markets on the stocks seem to be kind of holding firm, but crypto is at a very important level. We saw in our previous video that we had monstrous trades coming through ETHU, which we'll look at in a moment, which were massive, massive amounts of dark pools. Well, it turns out, according to the latest CoinShares weekly asset flows, we've just seen new records. $1.9 billion in weekly inflows, ninth straight week of massive gains of inflows, 13.2 billion year to date, new record. And we also have the best week since February for Ethereum. And that's interesting because it's record inflows, yet Ethereum was actually dropping. And it dropped all the way back down to what we call the most traded zone, which was around this area that we then saw the number one and number two largest trades come off it. Now, we've since then seen a spike up in Ethereum, a bit of a drop down, and that's left what we call a shooting star candle. And as you'll see later on today's video, near the end, we've got a pretty big key level that will create, you would think, a bit of a short squeeze should we get through that. So all eyes are on how does this trade? Of course, we know it's inflows at this stage. We know there are tons of transactions near this peak, and we don't know yet whether this is a distribution or whether it's accumulation. Of course, I'm always going to go with the accumulation side, as that tends to be more the kind of way that crypto works. But that doesn't necessarily mean it will be. And we'll obviously be looking for that reaction very soon and reporting it back here on the channel. So make sure to subscribe if you enjoy that type of stuff. Now, in terms of the other reason why the market's doing quite well, even though GDP is being downgraded, we're just seeing a huge rally in semiconductors. And this is driven by an AI boom, which is now delivering real contributions to the US economy. Semiconductors are the place to be, or one of the places that's been very hot along with metals recently, and it's led into markets kind of doing that recovery. We dropped during the first 100 days of course, the Trump presidency. Then we've kind of picked up, and we now find ourselves coming into that very big turning point. Possibly what happens here between June and September of this year will be the most important read of whether we're going to see some kind of real fall off or some kind of incredible gains that tend to happen if we don't go down the recessionary path. The first 200 to 250 days tends to matter. And that's because we've seen some pretty big changes. But on top of that, we've also seen markets where we've had pullbacks that are very significant, similar to the dot-com rally. And if I had to guess, I'd say we're kind of somewhere between 1998 and 1999 in terms of where we are in the AI boom so far. Does that mean there's more to the upside? Yeah, there certainly could be. Euphoria is running just absolutely wild right now. Anything to do with quantum computing, anything to do with ARK-K, which is a 2021 stock, hyper growth is absolutely flying. And we're also seeing a return of the IPO market, which we're looking forward to doing a special on soon, because the IPO market has a lot of synergies with sometimes the back end of a bull cycle. What's going on when it comes to gold and silver? As you guys know, we've loved gold here. We think 3,600 for gold by October was that kind of our movement. It may even reach it sooner. Some big flows going into gold. Central banks in particular purchasing up, as you'll see in a moment. And silver has been playing catch up. So since we've talked about silver over the last 2 months, it's really appreciated. And that's just playing catch up based on that gold silver ratio. We also know that China's been buying a ton of gold and doing it in ways that we may not be able to see. And of course, according to the latest data that we've been getting from Bloomberg, from Goldman Sachs, from other places, we've seen a lot of purchasing coming in from China that isn't really on the books. We've also seen a lot of backdoor liquidity coming in. Both the US Fed has been kind of injecting a little bit in the markets, and we've also seen world central banks, particularly China, really stimulating their economy. And that's helped HSI, which is one of the big markets that we're kind of feeling are doing pretty well this year. Yeah, I guess you would say hold fairly well. Now, before we go to the options movements and we look at, of course, some of the lead indicators, let's have a quick look here at the S&P 500. So it did manage to reach down to the daily 20 moving average on the futures. It got around that 59.30 to 5900 zone. And we do know that there are a lot of puts here. So this is basically a put wall that's been looking or been sitting around that zone. We also know that the market has notoriously liked the 20 moving average on the way up. So both here, over here, here, and now here in the futures, and that we're in kind of that pit at the moment. So what a pit is we call it a pullback in time. Effectively, it's a market that's not sure whether it's a little bit overbought, which probably is, or it's willing to reset the indicators. And we tend to see this when we get these extreme overbought conditions, whether you're looking at bullish percent index, RSI, MACD, most charts are going to show very overbought conditions. And I actually don't mind whether it sits in a pit and then breaks to the upside, which would indicate an all-time high is incoming, or whether it actually declines down to something more around the 5800 zone, which is the daily 50. Now, the daily 50 is probably the preference, and a lot of you will say, well, I don't want the preference, I want it to go up and away, but that's more of a healthier return. We often see the daily 50 being a pretty good level and giving more of that considered pullback. And I thought that we might have seen that recently, but then of course we've had all of these escalations, and we do know that at least the initial reaction from the street is often to go against what the news media is telling you, and that is, in this case, to flow upwards. No new high though, not breaking through 60.60, very much looking at this level up here, 60.68, break that, of course, you'd have to think we're going towards 61.25, 6100, which is where you've got call walls. And at this stage, the market is kind of just sitting in that sideways zone. Levels to watch, we've certainly got 5900, 5920, 30, which is the support. And because we've gone a higher high, higher low, higher high, equal low, if we now break underneath 5920, then you'll have to think the next stop is 5800. So there's definitely a couple of strike levels. I would say it's very neutral here. This is probably the most neutral the market's been in all of this bull run, as we're trying to figure out exactly which trend this is on. A few of you guys have been saying, which way is this going? Well, of course, you would always say, well, the trend is currently up, so therefore up is stronger. Up is historically stronger in the S&P 500. But then you've got the second half of June being a little bit weaker, OPEC's coming up, and geopolitical tensions could exacerbate more than previously because, of course, we've got that nuclear word in here. And yeah, I think it's the most neutral I've seen it, and maybe this year in terms of sideways action. S&P 500 does have a couple of big core walls. 60.50, you'll want to watch that over this week. You can see here whether it's the 17th, the 18th, or even the OPEX, the 20th here. 60.50 comes up a lot as a massive core wall, and you'll really notice that just underneath 6,000 seems to be where the big puts are this week. And this is the one you want to watch because really around this is the most amount of options expiration in terms of size. You can see the difference between the 0 DTEs and the massive size here of the general OPEX, which is the big options expiration. And this is a quadruple witching, which means there are a lot of options that aren't just the S&P 500 ones. You've got single stocks as well having mass expirations there. Tesla is at call wall, so we know that we haven't broken out. We're not really seeing that massive flow to the upside just yet. So Tesla at 330. And of course, then we've also got NVIDIA, which is sitting around that 145. So effectively right on that level, that is again a call wall, 145, 150, get through 150, absolute explosion in semiconductors. And as we'll see in a moment, it really just comes down to this very important level for semis. So let's jump on over to the charts. We'll look and start here with the US 30Y. This is going to be a very important chart this year. I think there's a point where the Fed steps in. I don't know where that is yet. I'm speculating it's between 5.5% and 6%, where the Fed really panics and goes into QE. But at some point, there's probably going to be a QE event. When that does occur, Treasuries is going to be the place to be. Now, is it right now? Well, obviously, we're not really seeing it kind of rally up that much. We did get that little break of the inverse head and shoulders on the small time pattern here. But do remember, Treasuries is not usually a trade. It's more of an investment vehicle, and it hasn't been a good investment vehicle for most big fundies the last couple of years. Do I think it'll come back when people least expect it? Yes, but I would have a guess that the best working option right now is going to be something around the Fed. The other thing that's worthwhile watching at the moment is going to be copper, and that's because often you look at copper and you consider it as a worldwide growth concept. So what we're looking for actually is a close weekly here above 486. So we haven't seen that just at the moment, but if we are going to continue to grow and see a lot of strength in the markets, it'd be good to break like a $4.90 in terms of a weekly close, and we will be tracking that on this channel, so stay tuned. What about options? Well, as you can see here, options have spiked up a little bit. We've basically seen bonds showing that they are a little panicked, but not much. And this is corporate bonds. So corporate bonds are always important for us to look at, because if we don't see corporate bonds spiking, then we usually say it's like a calm. At this point, a small spike, more data coming through. A lot of this is delayed a little bit. So by the time we see it there, even though it's a lead indicator, it can sometimes be a couple of days. So we might be getting like the fear that might have come in on the market on Friday that may actually appear over the next session or so. When we get it, we'll share it with you guys. At the moment, I'd say the corporate bonds market, which usually tells us real fear, is just not showing it at this stage. US dollar has continued to kind of flounder at these points. You can see it's actually a gap down. Could we be looking at it like this and a gap up? That would be an island reversal. For now, of course, I'm mostly negative on the US dollar. And I think that even if it gets up to something like a 99, we're probably looking more towards the shorts and therefore other currencies strengthening and appreciating against the US dollar, as we do see a little bit of international fund flow where people are selling some US stocks from international holdings and moving back into their country of choice. So if that continues, the US dollar could also weaken just from an outflow, which we've already seen here in 2025. Not something I'm super worried about this stage, but certainly something to keep in mind. Gold, what's going on? Big weekly break, super important break in my opinion. Declined since then, which is no surprise. We obviously saw spikes in gold, geopolitical risk. We saw spikes in oil, and then now we've seen a pullback in gold. But gold continues to be a series of higher highs and higher lows, and the trend is, of course, still in the bullish case. I think there's an excellent buy day trade case scenario. Not necessarily just yet, but one thing you could look at is maybe just a break high above this Monday level, and certainly you want to be watching that 34.15. So 34.05, a level to watch over the next 24 hours. Silver holding its own. I would say this is a pit, so pull back in time, and realistically a pretty good level indeed. I'm liking it. I still think that buyers, if they sell to 34.50 or something, I still think buyers are committed here on silver. And yeah, it was a huge move, and I'd be looking for 40 to 43 ultimately, but may take a little while. US oil, now this is just a dangerous trade now. If you're in it earlier, we obviously saw about 2 weeks ago now, for whatever reason, technicals looked a lot better. It is part of our day trading masterclass. There is replicatable trades here. And you'll notice that I was kind of like geopolitical. I don't really want to deal with this year in terms of oil. We still cover it here on the channel. And then all of a sudden I was like, wow, this thing is actually looking really bullish. And this was before any of these events. I didn't know this was going to happen, neither did you, but the TA flow showed that something was going on. And of course, that ended up being a wild movement. But now it's just pure volatility. This is kind of where gamblers go to play in terms of, trying to figure out what's going on. I would say there's no clear case scenario for either thing. If you were going off the odds, generally it is spike up, down, and then if escalation continues back up to the peak, if not a little bit higher. So yeah, that's really the way it's played in the past. And I guess that's the way you have to look at it. Tesla 330, this is the call wall at this stage. You can see here no break above these wicks. It's going to be a little bit of stop losses above here. So if the markets do rally through, you've got a call wall break. You've obviously got then a potential squeeze, and of course you have stop losses being hit. So that's all going to be a very important zone. Nvidia, similar thing, right at resistance, 145. It is a tough thing for it to break. If it does, that's going to signal to me that the market wants an all-time high. 145, 150, very important level here for Nvidia. And you can see here semiconductors at the all-important resistance. So this is a huge level for semis, and they are struggling here. Like you can see here, they're just chilling at the high. They could sell. It's certainly the area that I would make a case for a lot of people to technically take profit. And of course, at this case, we need to see a breakout up or down to find the next, momentum move. So this is really a time to be patient here on semis. It's just up, down, up, down, up, down in a very tight range. Where the big movement's been going has been what we mentioned just recently, which was ARK style funds, hyper growth style funds, uranium. Uranium went bonkers over the last, 24 hours. Look at uranium go. That's probably starting to feel its move. I mean, at one point here, let's have a look at the close. At one point, it was up 8.82%. You can see this extreme run that it's been on. A lot of hype kind of going into a lot of areas of the market, and that is having that effect. If we have a look here at HSI, you can again see the Chinese market, just a series of high highs and high lows. So that's been kind of playing out the way you would expect. And US 2K has been disappointing. So if you think about it, this is, by the way, this should be down here. This is the area where you would expect it to find more buyers and do a little bit better, but the yield is taking an effect. Remember, 37% of businesses in the Russell 2K don't make any money. So because of that, they're very susceptible to refinancing this year and early 26. We have to watch this space, but currently it's still theoretically in an upward trend on those timeframes. And then of course you've got the NASDAQ. It's still at resistance. I would call this neutral. Why? Because it's not out of an upward trend. It's in an upward trend on most of these smaller timeframes, but it's near the peak, and this tends to be where you see pits. So of course we have a lot of overbought reads, and as I've mentioned, day to day there are a couple of switches. Like yesterday, it seemed more bullish. You're obviously looking towards the rally. It happened. But when you get these reads, traditionally they've either ended in sideways style markets or even little pullbacks. And of course, I'd love to see more the daily 50 because it makes more technical sense on the S&P in particular. Now, where the markets are looking a little bit healthier is being the crypto market. We've broken up. We've then sold down. We've then traded this 2,500, seen massive trades, rallied up, rejected that, which certainly looks like a distribution Wyckoff at this stage. So that is a negative read. So I'm actually very interested to see a 2,700 plus. If that happens, is this a squeeze? What do you guys think in the comments down below? Are we seeing a massive accumulation of Ethereum and probably Bitcoin at these levels? And again, Bitcoin's similar. You've got most traded zone, big trades, bought through, and holding better than ETH at this stage, even having that rejection wick. If this gets through this 110 level, are we going to 125 very quickly? Well, at the moment, we've got really three main hedges in the world, which have been kind of gold, silver, and Bitcoin this year. And all are doing very, very well percentage-wise. So Bitcoin hasn't really had its move here. Neither has silver during this geopolitical tension stuff. Gold did, but didn't really hold too much above. Are we about to see Bitcoin break out? This is an interesting point for it. And I would say an inflection point to either continue on in the trend with all these inflows or to super trap a lot of retail. So if I had to guess, I'd go more with the upside. That's what we're starting to see in terms of the flows and the big trades. But we'll be updating every single one of these videos. Guys, if you enjoyed today's video, please remember to subscribe, smash that like button. Definitely check us out as well if you're in Melbourne, Australia. 2nd of July, a few tickets left for the free event that we're running. Some drinks are provided. We're sharing a great amount of information. I've obviously got a big speech there, so that's going to be awesome. And it's a great way to meet other fellow liked traders and investors in the community. We look forward to doing more of these around the world, hopefully in 2026 as well, thanks to your support. And as always, in terms of news, it's just all about Wednesday. The big thing here is the Fed. The Fed on Wednesday in obviously New York time. We're going to be looking for the press conference. We're going to be looking for what is the Fed going to do? Are they making any changes? That could be an inflection point as well with the OPEX. So we need to watch those options very closely and the walls in particular. Thanks so much for watching. We'll catch you soon. Bye for now.